and welcome again. This is Robert Schein, Managing Director and Partner at Blanke Schein Wealth Management. Today is August 18th of 2022, and this is a Thursday. So let's talk about what's moving markets. Markets are continuing to do well on the heels of yesterday's Fed minutes. The Federal Reserve will start here, the Fed watch. And as you've been following along, as I've been discussing, the Federal Reserve has been moving markets since January 3rd, at the very beginning of this year when the market started selling off and having a lot of trouble digesting what the Fed's going to do. Ultimately, we pay attention to and listen to and obviously watch actually what they do with regards to Fed policy. And yesterday was an update from the Fed, and inside the Fed minutes from their most recent meeting was basically two-sided economists, if you will. Go figure. Shock. They wanted to keep the market guessing. There was enough dovishness in the notes to keep sort of the bid underneath the markets, or the anticipation that the Fed may be turning over at some point in time. But there was enough hawkishness in the notes saying, hey, wait a minute, we're still going to raise rates in September by 75 basis points, and then even more so, more rate hikes to come by between now and year end. Either way, underpinning of all this happens to be inflation. Inflationary pressures seem to be moderating in some subsectors of the economy, which is a good thing. And the markets, the equity markets, are taking notice, right? Equity markets price 3 to 6 months in advance, even 12 months in advance at some point in time, based upon economic data, because it's really digesting not only real-time information in terms of what's happening, but also forecasting ultimately what the economy looks like. Now, the economy very specifically, if we look at housing, July's housing number just came out, and the July sales are down just about 6%. This is not unexpected. We knew, and if you follow along at home, as many as you do, we appreciate that. We've actually been doing a lot of client reviews. A lot of people say that they follow along, so we appreciate that. Let us know if you do in the future. But also the Fed. The Fed, as we talked about in previous videos, is the Fed squarely is putting housing in its sights to go after, to bring down and moderate some of the overall inflationary pressures within the economy. If we've known housing in the last, 2 years, you've seen everything be a little bit out of control. There's a supply side and imbalance in terms of buyers and sellers and what's available, but also the frenziness, the bubble of which we've seen it in the past, even a decade ago. And we're still remembering that. So the Federal Reserve is taking housing on, and it's actually, as we said, and as we predicted, it's actually impacting the housing market. We should have more updates on housing, maybe on the Friday Insights for you. But as of right now, housing seems to be moderating, finding that supply and demand balance, or imbalance is finally now more finding a balance, if you will. But the moving average in the S&P 500, there's a good positive read from a technical analysis side. So we have the percentages of stocks, one of the key things that we watch in our industry, and to find out if the market is actually a true rally for certain, something to be, it's a buyable rally, or we're getting out of the bear market and turning over to a new bull market. One of the key sort of indicators that says we're giving us a positivity on this reading, we just hit in a positive way. It's a percentage of stocks in the S&P 500 that are above their 50-day moving average. And right now, anything above a 90% is a very healthy reading. In fact, history is our guide. It shows that we have had the bear market behind us. We've turned a corner. Now, we're at 91.3 right now. That's a great signal. There's a couple other signals from a technical analysis standpoint. And finally, we're going to keep our eye on Davos. All of the central banks get together in a big, basically, financial summit. And we're going to Fed watch as it relates to what the Federal Reserve basically says to the community of financial superpowers and what they're trying to message. Keep in mind, this has always been a very big summit in years past, year over year, where news is broken, financially speaking, and markets react accordingly. So that's what's on the Fed watch going forward, and we'll be keeping our eye on that. Keep in mind, we also want to know what the Fed is thinking about doing as it relates to unwinding their balance sheet, or ultimately getting rid of and shrinking quantitative tightening, slowing down the economy that way, in addition to what they've already done, which is increase interest rates. So again, Fed watch, front and center. Are we out of the woods yet as it relates to the market? Remains to be seen, but we're seeing some positive signs develop. More to come as we continue, and thanks for watching.